Hello everybody and welcome to Bitcoin Predator. And what a week, right? I mean, quite choppy, a lot of news. And the biggest question that we want to answer right now is, when will this blow off top happen? Actually, it's taking more than I expected. And today we're going to try to answer that question. Hit the like button and subscribe. Let's get into the chart. So we're going to start by looking at the weekly change of structure that was breaked a couple of weeks ago. But there was not a lot of volume on the weekly time frame, as you can see right here. So what I see from the trading behavior or from the liquidity perspective right now is a lot of accumulation going on before the next all-time high, before the price discovery start, right? And here's the thing. On the weekly time frame, we had a fair value gap around this region right here, but as you can see, was already filled out on the week of 2nd of June 2025. So there is not much liquidity further down before continuing to go up. I don't think that the price will continue to go down up into this region right here. Maybe because from the cycle perspective, we are almost at the end of the 4-year cycle bull run. So it doesn't make sense the price to go that further down before continue to go up. Now, if we zoom into the daily time frame, we're gonna notice that the last daily cycle low was on 9th of April, and it actually respected the 6-day cycle of Bitcoin. The next one was around the 6th or 5th of June, and I expect the next cycle low of the 60-day cycle to be around this time right here on 9th of August. This means that if we are on an uptrend, we are right translated. And from the last 60-day cycle, we can see that the previous cycle high was on 23 of May, right here. So it means pretty much that we are running out of time in order to get the next cycle high. I mean, this is the middle point to be used as a reference for the right translation on 10th of July. So we have until this day right here in order to get the next cycle high. But what I'm seeing right now is that somehow we were actually going to the uptrend and now we are actually consolidating. So that I don't like this very much. We are consolidating and we are literally running out of time, because even if you take a look here and you consider the M2 global liquidity correlation, you're going to notice that we had the break of structure right here in this region, and then we consolidated a little bit and another pump to the upside. The problem is that as soon as the price went down, we should have been continued to go up and spiked. But that did not actually happen. We are taking a little bit more of time. I know that the correlation with the M2 is not exactly 100%, but it starts to raise a little bit of red flag if we are going to consolidate a little bit longer before continuing to go up. Nevertheless, I think the M2 global liquidity is still a really good indicator. It actually has a clear uptrend since the beginning of this last stage of the bull run, and I think Bitcoin will continue to follow. Now, zooming back into the daily, we can see that we formed a clear supply and demand zone right here since around 9th of May. So after we had the cycle low of the 60-day cycle, then we have after we have the cycle high of the 60-day cycle, then we had the cycle low. So a clear accumulation behavior right now on the price, and I still expect that soon enough, maybe today or the beginning of next week, we're gonna have the blow off top that we are hoping for. So if we zoom into the 4-hour time frame, we're gonna see a clear fight between those hedge funds and index funds right here on the top, with a lot of trade going on, and the formation of supply zone around the 110 and 111,700 level. The same goes to the lower level of 101 and 100, which I consider the 100 level to be a key level, psychological level. When it comes to points of interest on the 4-hour time frame, I see a order block formation right here on the 102-100 level, and it just happened that we have another point of interest right here on the 104,200 and 104,800 level. But since we have a lot of imbalance with liquidity waiting right here in this region, I do not expect the price to go only to this way, to this level before continue to go up. I actually expect the price to go as further down as the order block. Because here's the thing, I noticed that Bitcoin during this time, it does a lot of endorsement. So even if we have order blocks all over the place and fair value gaps, usually the price spike a little bit to the downside, maybe this further, and then continue to go up. And that level is exactly the same level that we have a huge liquidation right here in this region, and here's the 102 level. So I think that the price is still going down as further this down before spiking back up. So there's a lot of liquidity for the institutions to grab before continue to go up around 103, around the 103 level 200, around 97 million of liquidation leverage to be taken before continue to go up. Since earlier today, we already have a lot of liquidity grab to the upside on the 105,800 as further up as the 106,300. Around 111 and 103 million of liquidation. And since that liquidation was already taken right here from the upside, the next liquidation zone will be right here at the top, which I think is going to happen, the breakout. But for that to happen, the price must go as further down to the 102 level, where we're still going to have a lot of liquidity, and then yes, after this grab of liquidity, definitely a blow off top. And since we are on an uptrend, I still think this is going to happen no later than the middle of next week in order to respect the right translation of the uptrend. If we zoom into the 1 hour time frame, we can even have a little bit of more refinement of our entries around this region right here on the 101,900, 101,462 level. And if we zoom out a little bit on the economic perspective, for the M2 global liquidity to continue to go up, we must see the dollar continue to go down. In order to dollar to continue to go down, we need to see some rate cuts still this year. The Fed just released that they're gonna wait and see again right now as in June, and there are not going to be any rate cuts now. So the probability of a rate cut later this year is increased, almost 99% of chance that we're still gonna have rate cuts this year of 2025. So bottom line from Bitcoin, as I can see right here on my Predator oscillator, is that there is still a lot of room to go up and reach the top. And right now I'm expecting a similar behavior that we saw before on November 2024. We're gonna see the momentum line being broken by the price line, a little bit of consolidation, and then some touch or some test on the momentum line before continue to the upside. And I still think this is quite possible, you know? If you see, we're still having a lot of ETF inflow. Over the past few months, more and more ETFs are pouring more and more money into the Bitcoin. We had a short outflow right here at around the month of May, a little bit of June, but you can see that overall, we still have much more inflow than outflows from the ETFs to Bitcoin. And you can even confirm that, according to this news from BlackRock, that even though we have retail staying out of Bitcoin trading right now, we see much more institutional money getting into Bitcoin. So BlackRock's spot Bitcoin exchange is nearing the 70 billion mark in assets under management, signaling growing interest from institutional investors, even as retail inflows appear to be slowing. So pretty much institution is what's driving the price of Bitcoin right now during this cycle. Yes, we can see that everyone say that this cycle is different, and in fact, yes, this cycle is quite different. If you have a look from previous years on the number of active addresses, whenever retail investors were spiking their addresses, Bitcoin also reached several price spikes. But when you have a look, since in the middle of 2021, we have seen actually a consolidation of active addresses from the retail. In fact, a drop of those addresses. But still, price continued to go up. This means that if it is not the number of active addresses from the retail, we can clearly confirm that the price increase of Bitcoin during this cycle is being held by the institutions. So I'm thinking about making a video only about that, because if you take a look at assets who are primarily held by institutions, they behave differently from the retails. You can see a lot of spikes from the retail institutions like here before on Bitcoin. It's all about how the order book is filled out, and institutions, they definitely know how to fill the order book, different from the retails. Institutions are always looking to get the best discount and premium prices on their behalf. So that's why we have been seeing a lot more of consolidation and gradual price increase over time. Still, I'm not discarding the possibility of a price spike over the next days. Again, this is the financial markets. You cannot assume or predict anything. And this is an interesting behavior this cycle, because you can see that right now, since the last break of all-time high, we reached the grid level, and then we are back down to the neutral on the 48 level. And part of the reason that we are now in the neutral phase, maybe gonna reach the fear level anytime soon, is because of the Israel and Iran war. Nevertheless, as you can see right here, we stopped at the neutral phase from the war, but yes, the price is stable, even though that we had a war news. And that's the interesting thing about the difference from the retail and institutional investors. If Bitcoin price had been strongly held by retail investors, I was pretty sure that due to the war news, we could see this fear and greed index go as further down as to the fear or extreme fear level. But this did not actually happen. Since we have a higher institution adoption, I think the price was held steadily. Yes, a drop to trigger some fear, but not so much as I would expect compared to previous years. And right now, earlier today, we had a grab of 106k liquidity, just like we saw right here on the liquidation heat map of around 106,000 level, and institutions are holding Bitcoin long. So a little bit of disappointing with the retail, I think. But nevertheless, I kind of understand what's going on. Most of the retail that are selling their Bitcoins have been holding them since the beginning. And right now, I think they're starting to take some profit. And from the macro perspective, from the MVRVZ score, I still see a clear uptrend. And also, we are not even close to the peak. Not only that, but I still think we have a lot of room this bull run before hitting the all-time, before hitting the peak and starting to go down. We still have pretty much the entire of 2025 year before getting to the peak and start the bear run. And this is actually good, the fact that we are still chopping on the S&P 500. I believe that Bitcoin performs best when the S&P 500 is getting a gradual increase and not spiking. That's when Bitcoin has the best performance. And I still think the S&P 500 will continue to just go up and down a little bit with a gradual increase as the war, Ukraine and Russia, Israel and Iran, the tariffs, everything is going to be sorted out, but slowly. And although we are still holding the rates steady, we can see the unemployment rate, it is not spiking. It is actually quite stable. So that takes the pressure a little bit off from the Fed to cut rates. We can understand why they're not cutting rates right now, and they're going to prefer to wait and see. We can also see a downtrend on the US bonds 10-year yield. We expect this to go down a little bit more. Core PCE is also a little bit going down, and we can notice a little bit of an easing on the quant tightening. So this is what I expect from Bitcoin, not a lot of changes, everything will stay the same. I don't know how long we are going to consolidate. Hopefully this consolidation will stop soon enough so we can start the blow off top and continue to follow along the M2 global liquidity. Tell me what you guys think in the comments. Thanks for watching, see you in the next video.